everyone. Thank you so much for joining. This session is about income statement and in particular about introducing what common size means and to introduce some of the ratios. When analyzing income statements, the main problem is that no two companies are the same. Even if you compare and look at one company over a period of time, over a period of few years, it's sometimes hard to analyze whether the company has improved performance or decreased its performance. Especially when looking at different companies, you see different revenue figures, different cost of sales figures, and so on. It's sometimes really hard to compare, especially if the sizes of those companies are completely different. What we do to be able to compare different companies or to be able to analyze one company over different time periods is we use common size ratios. Not common size ratios, we use common size format, so to say. What this means is if we look at, for example, we have three companies, company 1, company 2 and company 3. Let's assume company 1 has 10K in revenue, company B has 10K in revenue, and company 3 has 2K in revenue. Let's look at cost of goods sold, let's look at gross profit, let's look at SG&A. We can use different items, doesn't really matter, just to illustrate what common size actually means. And then let's assume 3K, 7K and 1K, 7.5K, 2.5K and 1K, 2K, 0.6K, 1.4K, 2K, 6, 2, 6, and the last one is 0.2K. Yeah, so three different companies, different size. You see the first one's 10K, 10K, the third company a bit smaller. So if we want to understand and see profitability and underlying cost, what we do is we use common size. Common size means we write down every single line item as percentage of revenue / sales, which would be for company 1, 30%, 100%, 10%. So every single line item, 3/10, 7/10, 1/10, 30, 70, 100. If we do the same here, would have 100%, 5%, 25%, and then 10%. So again, what we do, every single line item illustrated as percentage of revenue. Same here, this would be 100%. And then again, if we go through step by step, again, 30%, approximately 70%, 10%. Yeah, and again, if we go through, this is a subtotal, so in the end you can't add cost of goods sold, GP, and SG&A because this is a subtotal. But if you go through all the items of an income statement, then all the cost items and input item, they should add up to 100%. Here I have left out many more items, that's why it's a bit more difficult to see. But what you can do is, rather than looking at absolute number, because you don't know, okay, 3K, 7.5, 0.6, but what you can see here, if you look at the common size values, is that the direct cost of goods sold are way higher for company 2 compared to company 1 and 3. You can also look at gross profit. The profitability is way lower for company 2, only 25% compared to company 1 and company 3. And then from an SG&A perspective, you can see it's quite similar across the 3 companies. So it gives you way more insights into analyzing the company. And what you also noticed is there are a few ratios that we use many times to get a better understanding. The first one is gross profit margin, which is gross profit over revenue, which is exactly what we have already done. So common size is actually a way of using ratios basically for every single line item. So here 7K over 10K equals 70%. So the gross profit margin for company 1 is 70%. There's another formula that we often use, net profit margin, also called profit margin, is then in the end net income over revenue. I have not depicted the net income line item here, but it would be the amount that we have again over revenue. And then you can compare type of profitability again, sometimes net profit margin, also called profit margin, or return on sales, because it is the return that you receive from $1 of sales. What is the equivalent net income? So there are many additional formulas we could use. Sometimes we use operating profit, pre-tax margin, and so on. In the end, all those ratios are a kind of common size. We can also do the same for a balance sheet, either on the equity side or on the asset side, which I will explain in another video. Thank you so much for joining. Talk to you later. Bye.